Good evening, ladies and gentlemen. You're watching Startup Central right here on ET Now with me, Sumita Karir, where we touch upon all the things that are happening in the world of startups, technology, entrepreneurship, and the new economy. And let's then begin the show with some news that's coming in from quick commerce. As quick commerce players, they're gearing up with festive discounts, steeper assortments. In fact, companies are expecting a big surge in demand this time around as well. My colleague Anjali Palod is here with all the key expectations and all the arrangements that quick commerce companies have done for the festive season. Anjali?
Right, so the festive season is a key period of business for quick commerce companies, and as they've experienced in the past few years, the festive season is the one that brings them a lot of business. So as per expectations, they are expecting a big jump in demand during these days and to maintain delivery speeds, as well as to make sure that customers receive exactly the kind of things that they want. They're going with deeper assortments, addition of new categories, and also discounts is something that will be in focus now that we have a couple of more quick commerce players that are in the market vying for the same set of consumers. So if we talk about category expansion, first of all, we are seeing expansion happening in festive SKUs like jewelry, ethnic wear, something that we had not seen much of last year, will be in focus. There is gift cards as well as gold and silver coins. Other than that, gifting is one key sector that different quick commerce companies are focusing on, of course, across budgets, and also fasting essentials, something that is coming from Instamart. If you look at BB now, they are deepening into non-core festive categories, which means not just the essentials, but also other things like home decor, gifting, cleaning is something that they are focusing on. It is also important for quick commerce companies to make sure that they have enough inventory, and for that Instamart, for example, is stocking up early, and they're also scaling staff as well as delivery partners. And also Zepto is going to be providing some hyperlocal incentives to boost the delivery partner participation, something that they might see a shortage of in key festive days. For example, Bigbasket now is also saying that 90% of their customers will get access to all 25,000 of their SKUs by October, and currently only 65 to 70% of their customers enjoy that kind of inventory. Talking about discounts, on Rakhi and Janmashtami, we saw around 60 to 70% discounts on key festive SKUs across quick commerce platforms, and so there is an expectation of the continuation of such discounts. Bigbasket now says that their discounts will be tailored to festival baskets, and there is no broad-based discounting from them as such. But Instamart says that Diwali is the one period that will feature the season's best offers on the platform, and also assortment and delivery timing is something that is of more importance to Bigbasket now here. There is also an inclusion of a lot of local favorites this time, which means that Instamart, for example, has launched hyperlocal festive favorites as well as to make sure that every particular customer cohort enjoys the kind of assortment that they wish to have. Along with this, there is a jump in the number of brand onboardings also, as more and more D2C brands also look to be listed on quick commerce platforms to reach their customers earlier, because of which we are also seeing a crunch in ad space, and brands are reporting increased competition on quick commerce platforms, and because of this, the ad costs are really inching up for the new as well as older brands listed on quick commerce platforms. Keyword-based advertising costs have risen as much as 3 times according to a few brands that we spoke to, and in comparison on Meta and Google, traditionally around this time, festive time, ad costs inch up by 10 to 30% only, which means we're seeing a lot of interest from brands as well as customers to shop on quick commerce as the festive season approaches closer.
All right, thanks very much, Anjali, for that comprehensive report on what quick commerce companies are up to. Of course, is a deeper assortment of categories, given the fact that quick commerce companies are entering into very many product categories as well. Keeping in mind the demand, the festive discounts are also deep, and that has also led to a spike in ad sales as well. But to get more details on what exactly is being planned by quick commerce companies and how exactly do they see the traction this festive season, I'm now joined by a very special guest. He's Vipul Parekh, the co-founder of Bigbasket. Thank you very much, Mr. Parekh, for joining us here on Startup Central. Appreciate you taking the time out. Let's first understand the kind of sales that you clocked on account of Rakhi and Independence Day, and what are you estimating and expecting on account of Ganesh Chaturthi? What have been some of the big trends purely in terms of not just sales, but average order value on a year-on-year basis as well?
One of the things that has happened is quick commerce has become the festival shopping destination for all Indian customers. So earlier people used to go to the high street, they used to go to the local markets for festival shopping. Now shopping begins on quick commerce. And I think this has been a significant change over the last 2 years. And because of this, you're finding a lot of new customers coming into quick commerce. And you're also finding a lot of customers coming to quick commerce platforms searching for festival categories. So as a result, festival shopping has become a huge category on all quick commerce platforms. And we've seen growth of anywhere between 50% to 2000%. And year on year, both Independence Day and Rakhi were significantly large for us. Just patriotic merchandise, for example, which is flags and emblems and things like that, have grew about 50% over last year. But if you take Janmashtami, if you take all those festivals, sales have increased by about 4x, 5x for most categories. And we are finding people are buying, coins, they are buying murtis, they are buying bal poshak, they're buying all sorts of stuff, festival stuff on quick commerce. And I think it's a combination of accessibility. It's much easier to get it. You get it fast. So I think that's expanded significantly because of quick commerce. And therefore, customers are adopting quick commerce to buy a lot of festival merchandise. We are expecting something similar for Ganesha. We are selling idols, we are selling sweets, we are selling all puja merchandise. And we expect that sales will be anywhere between 4 to 5x of what we did last year. Right. So for example, to give you, we sold 15,000 Krishna Sinhasans. Right. I mean, that's a very specific number. We sold thousands of flutes and matkis, decorated matkis and stuff like that, which are decorations for Janmashtami. Similarly, for flutes, we would never have sold flutes in a life before, being a grocery. But because of quick commerce now, we're selling thousands of flutes. So stuff which is very festival centric, and for this particular festival, is what has started selling very well.
Right, Mr. Parekh, in terms of just what we speak about Janmashtami, those are very big numbers and should perhaps translate into overall growth for the company as well. So what are your overall growth projections for the festive season, given the fact that we haven't still yet begun with the main festive season?
Right, so if you just look at festival merchandise, what we sold last year, we sold roughly about 50 to 60 crores last year. And I'm talking of this particular festival period. We will sell roughly about 6x that. So about 300 crores during this period this year.
Right, so 300 crores is what you're anticipating and expecting just from the festive sales season, and these will be driven by your quick commerce platform, which I believe is now 100% you're focused on quick commerce as a platform. But Mr. Parekh, is premiumization as a theme, is that viable for quick commerce, and how is that playing out, especially as far as quick commerce platforms are concerned on your platforms? If you could give us some details on that.
Absolutely. Think of it this way, quick commerce really addresses the top 25, 30 million customers today, because it's really centered around the tier 1 cities, which is where most of the affluent population lives. And these are the customers getting served by Bigbasket, getting served by Zomato, getting served by Swiggy Instamart, getting served by Zepto, all of us. And these customers have actually premiumized more than anybody else. So you see a significant trend in buying premium products on quick commerce platforms. So whether it's organic produce, whether it's organic foods, whether it's gourmet products, whether it's premium merchandise, whether it's high-end phones, people are buying all sorts of premium products on quick commerce platforms today.
All right, so premiumization is essentially fueling sales, especially as far as your urban centers are concerned. But Mr. Parekh, also give us an understanding of the impact of GST rate rationalization decision that will come into effect soon. Of course, many are factoring in that there could be a big boost during the Diwali season. But what about the period before Diwali? Do you anticipate customers to hold on to their purchases until Diwali happens?
I think everybody's building up for a bumper Diwali, honestly. And I think that's because we think the GST effects will come into place by then and customers will start spending. Overall, it's been a good consumer bounce back over the last 6 months. We are seeing premium customers definitely buying more. So we expect across categories, especially if you take discretionary categories like electronics, discretionary categories like jewelry, fashion, consumption will increase quite significantly. and especially in premium products.
Definitely. So a bumper Diwali, especially as far as premium products are concerned, that's what you're estimating on account of the GST rate rationalization decision. But Mr. Parekh, let me also tell you the last year when we had a conversation with Mr. Menon, he stated that quick commerce will become close to 75% of your business, and now it is 100% of your business. Tell us, how do you further intend to scale that up, and how many more cities do you plan to further venture into?
It's 100% of our business today. And almost about a year back, in October 24, we decided to convert completely to quick commerce. So we actually offer only quick commerce service now. That's a default feature, default product. If customers want to schedule, if they're not going to be present or they want something later, they can always schedule it. But otherwise, the default is 10 minutes. So our entire business is quick commerce now.
Right. Mr. Parekh, now Bigbasket also told ET Now last year that a major chunk of investments by the company will be going into dark store expansion and the expansion of more private labels, private brands in the category. How much have you pumped in at the moment as far as funding is concerned, and would you be looking at additional funds to pump into a quick commerce as a vertical, given the fact that you plan to scale it up?
Well, definitely, we have actually, we are opening almost about 700 to 800 large dark stores this year. So we are investing in those. And each of these dark stores costs a fair bit of money. So my guess is we'll end up spending close to about $200 million just in building new dark stores for this year. And obviously, on top of that, you have additional investments in customer acquisition, additional investments in inventory, which will all add up. So, and we'll continue to invest more capital as we go along. But this is really building the base network. And we will do incremental network addition depending on demand, depending on new city expansion. And then I think that will require additional funds.
Absolutely, Mr. Parekh. But given the fact that this is going to be a cash-guzzling business, how do you plan to balance internal funding with external capital requirements as you scale up operations?
We're part of the Tata Group. So funding is not exactly an issue. We don't need additional external capital, but we may decide to take it if it's required. But at this point in time, I think the group is committed to investing as much as required to make this model work. And we think this is a significantly large opportunity in quick commerce. So we'll continue to invest capital that is needed for this business.
All right, so external capital is optional, but it's not really essential. But let me come to the other part of your business. There's been a lot of conjecture about your food delivery business as well, which could be coming up soon in more areas than just Bangalore. You're currently running a pilot in Bangalore. So what exactly are your initial plans of expansion beyond just Bangalore? And what's the feedback that you're getting, especially as far as your pilot in Bangalore is concerned?
No, currently, this is only a pilot. And we are essentially doing 10-minute food delivery. So the kitchen itself is sitting inside a dark store. And the goal is to deliver the food that we make, deliver it in 10 minutes. And we're doing this in partnership with Cuban. We are actually going to test this in Bangalore in a set of dark stores and then decide whether it makes sense, whether customer feedback is positive, the economics work, what kind of customer adoption do we see, and then decide to expand it across the country. At this point in time, the early indications are very good. We're getting very positive feedback, but it'll be some time before we take a call on the pilot and extend to other locations.
All right, and we'll have to wait and see which other locations do you venture into. For the moment, your focus sharply remains on Bangalore as a geography. Mr. Parekh, what really interests you about this food delivery space in terms of how could it complement your existing services, given that analysts say that cash burn in the food delivery segment in particular could really weigh on the company's bottom line?
You will require investments in this business. Quick commerce is slated to become the single largest retail format in the country. And that is really the attraction for all of us. This is going to be a very large retail format. And any retail business is not going to happen unless you make investments upfront. So I don't think that is daunting. As long as this lead to profitability and you're able to build a profitable unit economic model, we believe that we should continue to invest.
Right, Mr. Parekh. So quick commerce, as you perceive it, it's slated to become the largest retail format. But since you talk about profitability, Bigbasket mentioned in 2023 that the company is looking at achieving profitability in 6 to 9 months, and that's going to be aided by BB Now. But I believe that there's a rework target for profitability.
This timeline has obviously been reset with our expansion into quick commerce and the fact that we are expanding, putting in new dark stores, expanding into multiple categories and multiple cities. We think we will be profitable in about 18 to 24 months, but more importantly, we'll be operationally profitable before the end of this year. And I think that is a key milestone because that essentially means that whatever profit we make beyond that really recovers only our, the only thing we need to recover is our fixed costs.
Right, so operational profitability is something that you'll be focusing on. But speaking of financials and continuing to talk on financials, now the company reported a revenue of over 10,000 crores, which is essentially a 6% increase YOY. What are your expectations this year on the revenue front? And most importantly, sir, how do you plan to minimize losses for the company? Because they've also ballooned in the same period as well, while revenues have gone up as well.
So I think our revenues will increase quite significantly this year. We expect about 50 to 60% annual increase in year on year. In fact, exit month, we should probably practically double over March 26 over March 25. So I think that itself will reduce our losses because a lot of the scale benefits comes down to operational costs, and therefore you become more efficient. And like I mentioned, we are going to become operationally profitable by March. So that will significantly reduce the losses. We expect this growth to continue over the next few years. We think this is a very attractive market, the significant product market fit, huge acceptance among customers. And we think this will make sure that the model breaks even in about 18 to 24 months.
Right, right. So 18 to 24 months is essentially what you're looking at for the company overall profitability, but operational profitability by March next year. And we'll have to see how that target really pans out. But so let me also talk to you about the overall space and maintaining a competitive edge, given the fact that there are new entrants in the space that are banking on the 10-minute delivery or the 15-minute delivery format. And there's lots of expansion to be done by these players as well. What do you think, besides, of course, the Tata brand that you have, the Tata backing do you have, how will you be able to maintain an edge in this space?
I think we have considerable strengths. We've been in the grocery business for a long time. Grocery is the mainstay of quick commerce. Most of revenue of quick commerce, the reason people adopt quick commerce, the reason they open the app every day is because of grocery. And we have significant strengths in this category. We have excellent private labels. 1/3 of our revenue comes from private label. We have very strong supply chains going back all the way back to farm for fresh fruits and products. We have a whole range of products. We carry an assortment which is amongst the best in the industry. And one of the things that we are also doing is we are working very closely with the Tata Group ecosystem companies to offer a much wider repertoire to customers in terms of products. And I think combined with the traditional strengths in grocery, plus the strengths coming out of the Tata relationship, allows us to build a customer-facing product, both in terms of assortment and quality of service, which is unparalleled. And I think that will continue to make us very, very competitive.
Right. Mr. Parekh, just one final question before we let you go. And I have to ask you about your IPO timelines, because last time when we interacted with the Bigbasket, which was almost about a year back, you had given us a timeline of about 18 to 24 months. Clearly, it seems that those IPO timelines will be reworked. May I ask you about the newly worked timelines as far as hitting the D Street is concerned?
But I continue to believe that quick commerce is going to grow by leaps and bounds. We've just seen the initial burst, and this category will actually grow at 50-60% CAGR over the next 5 years. So the size that you see today versus size you will see 5 years later will be 5x. So there'll be ample opportunities for profitable companies with a great brand like ours to IPO. So we do not have a definite timeline. I think we will wait to see how our numbers pan out, how the market reacts, and then decide to go for an IPO.
All right. So there's still some time before you actually look at debuting on the D Street. Meanwhile, the company's focus remains on operational profitability by March 2026. And then, of course, you'll be focusing on overall company level profitability. On that note, thank you very much, Mr. Parekh, for joining us here on ET Now. And I do hope that next time we can do this in person whenever you're in Delhi next. All right, ladies and gentlemen, time now for